Hello, traders. It is Wednesday morning, February 26th, and we are about 2 hours before the open. Today's theme is get ready. Get ready for what? Get ready for the next move down. The market's going to bounce for a day or two. It's going to try and get back to this 50-day moving average, and it's going to fail. And I'll tell you why I believe that's going to happen. But before I do that, as with all of my videos, I want to review the previous picks. That's the only way you're going to know if this systematic trading approach works. Go back and watch my videos for years. Pick out big market moves on a chart. Go back and see how we were positioned before that move. Then you'll have your proof. Do your due diligence. Don't trust what I have to say. Go back and verify. So the last pick that I gave you was BAC. That was on Sunday. I did that before the overnight markets opened up. And let's take a look at the 5-minute chart and see what the stock has been doing. So we had the market. This is the price action on Monday when the market reopened. And I had mentioned to you that when the market reopens, there's a good chance that it's going to gap higher on Monday. Why? How did I know that? Because we had a big drop the previous day. Typically, that's an oversold condition. The programs come in and they drive the price down to the 50-day moving average. We're going to get a gap higher. Typically, after a long red candle like that, you're going to get maybe even a couple of days where we stay inside of that previous range. But the fact that we sold off hard, that's a warning sign. Sellers are aggressive. And look at that volume. Yes, there is some risk reduction. There is some profit taking. We've had some bad news accumulating. Market's been able to shrug it off until now, but I think that these body blows are going to set up a knockout punch very soon. So my instructions to you were, look for a bounce on Monday. When we break the 50-day moving average, then you should take action on the shorts that I highlighted. BAC was one of them. That was a beautiful shorting opportunity once the market broke down below the 50-day moving average. Hello, nice late day selling. This late day selling in the market on right here on Monday told me, hey, you know what? Usually the market's going to stay in this range once it's in that prior day's range. This is going to be an inside day. Blam, they hit it, made a new low for the day, took it below the 50-day moving average right away. That was a warning sign that the selling pressure is heavier than we've seen recently. And this weak close, look at that sell-off in the last 10 minutes of trading. That was heavy to a new low of the day. Warning sign, warning sign, warning sign. Sellers are aggressive. Opened up yesterday, Tuesday morning. And as soon as we took out that low on that long red candle, it was time to short. I made about 37 points on S&P futures. I shorted Amazon. I shorted Marvel. And I took my gains right here. Really nice gains. Why did I take gains there? How did I know that this was going to be a decent exit point? Very steep sloped sell-off on the open. When we get a steep drop like that on the open, we tend to get big bounces. The 100-day moving average was just above it. So we poked at it once and then we went right through it. So support at the 100-day moving average has been tested and confirmed. And we closed off of the low and we closed above the 100-day moving average, this blue line. I'm expecting this little bounce to continue. Why? Look at every other series of 3 candles where we saw decent magnitude selling. Bounce. Okay, we can go back here. Bounce. Go back here. Bounce. The market doesn't go straight up or straight down. And especially when you've got such a strong uptrend, bull markets die hard. Buyers are conditioned to buy, 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 buy. Every dip they view as a buy. Well, it's not until you start breaking some of these major moving averages and staying below them, like the 100-day moving average, that sellers start to get the message that, hey, there's some selling pressure building, risk reduction time. So in the spirit of keeping this relatively short, I am looking for a tiny little bounce. Do not be an idiot and try and get cute and play this bounce. You will get burned. What you should do instead is you should let this bounce play out. You want wimpy, mixed, overlapping candles on light volume. And that bounce should struggle to get to that through that 50-day moving average. If that happens over the course of the next few days, then we start getting into next week. ISM Services is going to be released on Wednesday. I'm going to do a video on Sunday. I think that's going to be a trouble spot for the market because I think ISM Services is going to drop just based on what I saw from the service segment of the flash PMI that came out last week. And the market is going to react to negative news. We had consumer sentiment came out, dropped more than it has, I think, in maybe 17 years, whatever. It was a bad number. Consumers are not very optimistic right now. We're seeing retail sales fall off, minus 0.9%. Inflation has been ticking higher. So there are a lot of headwinds to the market right now, even on a global basis. But you know all that because you watch all my other videos. So what are we going to do from here? We are going to be patient and we are going to only focus on the short side. I'm going to show you a couple picks that I like just for today, maybe tomorrow. But I am going to have one foot on the gas and one foot on the brake. So if I see any signs of selling, I am out of that long. And I'm much more interested in the short side because what happens is traders often get cute and they come in here and they get long and they overstay their welcome and then the second shoe drops unexpectedly. Oh, I didn't see that coming so soon. So play the upside very cautiously or not at all. That's what the really smart trader does. They just sit and they wait and they watch to see how wimpy that bounce is and to see where that resistance comes into play. Somewhere around the 600 level, which would actually be above the 50-day moving average, would be fine. But what that'll do is that will give the market some time to digest these losses, and it will allow us to confirm that buyers are not very aggressive and that sellers are aggressive because they will keep a lid on the rally. And when we have that information and when this little bounce stalls out, then we're going to have our next opportunity to load up on bearish positions. So I'm going to go into my heavy selling search and I'm going to show you my bearish pick of the day. It is MSTR, MicroStrategy. It moves with Bitcoin. Bitcoin right now has been pretty soft and that's why the stock is pulling back. Technically, we have a stock that has broken below the 100-day moving average. This was one that I was considering as a short in my Sunday video. Would have been a really nice one. You can see the big drop yesterday, and here's the tell. Very important tell. Market bounced off of the low. Nice little rally, right? What did the stock do when the market bounced like this? Nada. Nothing. Stayed on its low. Sell, sell, sell. Sell, sell, sell. Sell, sell, sell. Sell, sell, sell. Long-term investors, long-term money doesn't care that the market bounced. They want to unload MSTR shares. Weak stock. So what do? We are expecting a little market bounce. Bring it on. Bring it on, because that's going to get me into MSTR short at a better price level. And I'll be able to watch it during that bounce. We love bounces. So, what do I want to see? Well, I'd like to see for sure, I'd love to see this entire candle preserved, okay? Meaning that we don't rally back up through it and fill this gap, but this is a pretty substantial drop. And if we get a day or two worth of rallying, I think that that's possible. That low is at 276.39. That would be a decent level to hold, okay? So we get a little bit of a bounce for a couple days, but that 276 level holds. If this plays out, and if the market puts in a wimpy bounce and it stalls out around 600 or right around the 50-day moving average, then I'm going to be watching this stock very, very closely. And the less able it is, if it's not able to rally back up to that level, that tells me that sellers are even more progressive and that the stock has a very good chance of hitting that 200-day moving average, which is 230. Stock's at 250. Plenty of room on the downside. Really nice breakdown through horizontal support in addition to that 100-day moving average. So we've got a couple of really nice technical breaches. Weakness, relative weakness, heavy volume. That's your short pick. So I'm going to show you on the long side, what do I like? You know what? I'm not even going to show you a long. Forget it. I was going to show you a couple of stocks that you could try on the long side. I'm not going to do it because I'm going to have somebody in the YouTube comment section go, you recommended ABC and XYZ as a long. What should I do now? The market fell apart. I'm not going to go there. So your marching orders are let this little wimpy bounce play out. Know that the market has sustained a number of body blows and that the selling pressure is building and that the path lower will be easier than it's been before. Instead of all this chop, we're going to get to the stage now to where we're going to get a nice crackdown, and I believe that we are going to test the 200-day moving average sometime in the next probably 2 weeks or so. So we get a little bit of a bounce, and then when that selling comes, we can hit it very quickly. I had mentioned to you that after this drop right here, we could test the 100-day moving average in the next few days. Well, that seemed like a stretch, right? We're way up here. Oh, look, we actually blew through it quite easily yesterday. So please make sure to subscribe to my YouTube channel. Turn on your notifications because I don't know when I'm going to be able to do these videos. I had time. I thought I would get one out. Wednesdays, Thursdays seem likely, but you want to get the news right away because then you're able to act on the trades that I'm highlighting. Thanks so much for watching. Trade well. We will see you Sunday.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.